Most business owners know they should be on top of their numbers, but almost none of us are. And I say that as someone who's handed over a multi-tab, multi-year spreadsheet disaster to my guest today and watched her clean it up without once making me feel like an idiot. Christina Conover-Merrill has spent over 3 decades in public accounting. 26 of those years have been spent at the same firm in Omaha. She holds an MBA in accounting. She's built her own bookkeeping coaching practice. She runs a moving business in San Antonio. She's an active real estate investor, and her husband is a retired Air Force officer, which is probably why we get along. Most people know her as Coach Christina. She calls herself the business beautician. She doesn't give perms, she straightens out the books. And in this conversation, we got into something I think every business owner needs to hear. Not just how to manage your books, but why the way you think about your numbers is either building your business or quietly draining it. Now, most of the time, you don't find out which one it is until it's too late. Coach Christina, welcome to the show. Christina Conover-Merrill, Coach. Most people call you Coach. Why do people call you Coach?
They do. Because I started my bookkeeping and accounting business about 3 years ago, and it started off as just me being a coach, just me coaching people in bookkeeping, helping them understand how to categorize, how to do a bank reconciliation, credit card reconciliation, and then to be able to read and review a balance sheet and P&L. And then the more I worked with people, the more they wanted me to actually do their books. So I bolted that onto my practice.
So when you say you worked with people to coach them, are you talking they're all business owners that wanted somebody to tell them how to do their own books?
You got it. Exactly.
Okay. And why would a business owner, so I'm kind of asking this rhetorically, but why would I as a business owner want to do my own books instead of paying somebody to do them for me? It's like one of those things. It's like, of all the things I want to spend my money on, paying somebody to do my books isn't one of those first things that comes to mind. Right? Because it doesn't help the bottom line in my brand new business owner or uneducated business owner mind. So help me dispel that myth.
So there's lots of avenues I could go down with that. So yes, definitely. Bookkeeping, accounting, tax preparation is all looked at as an expense, right? So if you were to say, I need to spend my money on this product because it's marketing and it's going to bring in leads, I have no problem spending that money. But to spend the money on something like this, people are like, I don't need to do that right now. I can do it myself. Now, Dave, using you as a pilot, right? Why would I not want to just fly a plane myself instead of just being a passenger, right? You got to kind of know what you're doing to be able to do it. This is the same thing. Yes, people can wing it, no pun intended, right? But that doesn't mean you know what you're doing. You have to know how to classify and categorize things. A balance sheet, asset, liabilities, equity, P&L, your income, your expenses. Because here's the thing. Yes, you can do it yourself, but again, with my experience and many, many clients that I have helped over the years, as I've mentioned, pay me now or pay me later. If you want to do it yourself, you do it yourself, but you're going to pay me a premium later to clean up your disaster. And it's way more expensive at an accountant's hourly rate than it is if you just either allow somebody to help you do it, like my coaching, or allowing somebody to just do it for you, outsource it, or bring in a bookkeeper if you want to pay a bookkeeper salary or whatnot, contract labor to do it. At the end of the day, it's why I always try to capture new clients from inception, because I want them to be able to, let's get it from the start. Let's capture all of your expenses, because at the end of the day, when you have good books, that helps you in so many ways. So if you need a loan, if you need financials for anything in your business, if you need bonding, anything like that, you need to present balance sheet and P&L. They have to be accurate numbers. You can't just hand over, just discombobulated mess and expect people to be able to fund you on that, right? So then too, when you get into the tax preparation standpoint, you can hand over clean books, then your accountant, CPA, tax preparer can do the books pretty easily take those numbers and actually do the tax preparation very simply, and that's going to save you money at the end of the day. And that's what I've kind of built my business on, because I know the tax preparation side of it. I've been doing it for a lot of years. And so I really help people that way to just be able to go into it and save them those dollars throughout helping them and teaching them and coaching them, show them how to do it correctly.
Yeah. So that's great. 'Cause I mean, when I started my businesses, multiple different businesses at the beginning, it was all, I'm just going to do this on a spreadsheet. And that was okay. But you say, people do their own books. Well, what about those business owners who don't even do their own books?
Mm-hmm.
They may get to the end of the year and say, oh, now I've got to go back 12 months and figure out what the heck happened this year. How does that affect the way they view whether they're, how profitable they actually are? Because you could be making money and feel like I'm doing a good job here. I'm sure you have some stories about that, but any clients who've thought they were making money, you do their books and then they realize, wow, I'm really not.
True. That's very, very true. And so one of the things that I always explain to people is just because, so you can't, there's a huge difference between your financials, your P&L, and your cash flow. They're two totally different things. They meld together to make up the big picture, but they're two totally different things. So when my clients, so again, them using the spreadsheet, use the example of, say, a rental, okay, and they are paying out the mortgage payment, right? So they're going to put the whole mortgage payment on the P&L, and that's not how that works. The principal goes to the balance sheet at the liability section. Your interest goes on the P&L. And so if you are throwing all that stuff on the P&L thinking, okay, that's how it works, your bottom line is going to look way worse than you think, right? Just because there's money in the bank doesn't mean you've made a profit. And just because there isn't money in the bank doesn't mean you had a loss. Money, where your cash flow goes, paying different things, can hit the balance sheet and not always hit the P&L. So you have to be able to discern between those types of categorizing and where they go in order to know what those numbers are going to look like. And yes, I've had a lot of clients that really thought they were doing well, very well, and not realizing how much money they're actually dumping into their business to keep it afloat. And so by the time we put everything together, get their balance sheet accurate, get their P&L accurate, and they can look at the big picture and comparatively to the prior year, that way they can see how it's coming forward. I had one client that was pretty sick when she saw what her numbers really look like, and not realizing she had dumped hundreds of thousands of dollars into the business, not realizing that that's what was happening. So it's huge. It's huge to get started from the beginning and know what you're doing so you can watch it on a monthly basis and not have to go back and recreate the whole year just to realize, oh my gosh, now I need to do tax planning. You end up with a huge profit, not realizing you have that profit. And now all of a sudden I got to figure out where I come up with the tax liability dollars, right? There's so many avenues of why it's a good idea.
Hey, everybody, quick break here because I want to tell you about another podcast that I've been running for over 4 years now with my podcast partner, Paul Fougere. It's called the Wealth Warehouse Podcast. We're two military veterans talking about how to control your capital just like the banks. We've been putting out new episodes every Monday for the last 4.5 years. If you want to deep dive into the infinite banking concept and learn how to control your capital like the banks, give every dollar more than one job, and create a legacy for your family, the Wealth Warehouse Podcast is a show you're going to want to listen to. So check it out. You can find it on every platform, including the one you're listening to right now. Thanks for checking it out. Now back to the show. So have you ever read the book, The E-Myth by Michael Gerber?
No.
So the E-Myth it's short for the entrepreneur myth, where you get somebody who's a specialist. And I think the example he uses, and I recommend this book for anybody who's kind of starting out in business, or even if you've been in business for a while. I've talked to business owners who've been, they've started businesses for decades, and they read that book every couple of years, just as a reminder. But it's really this myth that, hey, I'm really good at baking pies. I'm going to start my own business baking pies. But guess what happens when you become your own boss? You're also the accountant. You're also doing payroll. You're also the janitor mopping up. You're also the supply guy ordering supplies, like all these things. And then business owners get burnt out. What
Payroll.
I found is one of the things I'm sure most people hate doing their books. They look
Mhm.
at it as something that has to get done, but nobody enjoys sitting. I mean, not nobody, you do.
I
So
do.
thank God there's people like you who enjoy the numbers, who enjoy breaking things down and putting this, taking these pieces and putting them together. But most people, what I found the most effective thing for me in growing my own businesses was, what do I hate doing? That's the stuff I should not be doing, because that's the stuff that burns you out at the end of the
Yep.
day.
Yep.
And so giving over your books to somebody may be one of those things that, well, it's going to do a lot of things for you, right? One is going to free up time for you to go make money instead of
Yep.
spending
Yep.
your precious time, which is your most precious commodity, doing something you hate and you're not very good at, you're not suited for, and you'll probably
Mhm.
make mistakes at.
Yep.
Um, and it's, it's gonna, like you said, pay me now, pay me later. You
Mhm.
start on the right foot and you kind of know where your business stands
Yep.
over time.
Yep.
So tell me
Yep.
about a client who, because of like a real story of how you could represent how this actually became a not an expense, but a
Mhm.
way a business owner actually became more profitable because they stopped doing their own books
Mhm.
and they brought it into you. Maybe they were doing something wrong or they weren't seeing the picture correctly, and they said, "I'm going to spend some money, give this to a professional, and let somebody else tell me what's going on here."
So we'll touch on the e-myth part of it, and using the example of, we have roofer clients in our firm. We have three large roofers, and they're constantly spawning um, roofers that think that they can do this themselves. And so they go
It
out
looks so
there
easy.
and yeah,
It's,
yeah,
hey, I'll
yep,
just go knock on people's door and say you need a new roof, and then insurance
yep.
pays me. That's easy.
Yep. So you're right. So you're the salesperson, you're the labor, you're the management, you're the, operations. I mean, you're doing all of it. Plus you're the bookkeeper, you're doing all the paperwork, you're doing all of that. And they don't realize how much is really involved in that once they realize that. Plus capitalizing the business. Most often they don't have the money to capitalize it and start it. And so by again doing the books and getting them to understand what this is supposed to look like, and then when their books come to us in a complete disaster, and then tax preparation is can be anywhere from 8 to 10 grand just for a basic business when it's a nightmare. They're like, oh my gosh, that's too expensive, it's this, it's that, and then of course they look at us like, what are we doing wrong? And it's like, it's not us, we're just doing our job. Right? Then they go out of business, then they go back to just doing what they were doing before, and that's not the way to do it. But I have had a number of clients over the years, and especially recently since I started my bookkeeping and accounting business, being able to have them. So as I start coaching with a client, I get to learn their business. I get to learn the categorizing and the bank recs and the issues that they have and whatnot. And so I can kind of help guide them along the way with that and things that they can do and whatnot to help their business. Um, then when they decide that they don't want to actually do their books because they don't like it, they don't know what they're doing, even though they've been coached, there's still things that they come across that they don't always understand, right? So they still have to have some insight to that. So from there, when they want me to take over their books and I can take over their books, then I can watch that moving forward and we can start doing tax planning. So in the September, October, November timeframe is usually when we start doing tax planning. And so if I know I have a client that's been doing really well and they have some good profit going on, we can keep an eye on those numbers. And then when we're looking at that time, get into that time frame, then we can start talking through what are some of the things that you can do to help lower your profit. So whether it's if you're in a business where you need to purchase equipment or you need to build out an office or do some build out in your, repairs might be needed, things that you can say, what can I bring into this year to lower the cost that maybe I was going to be doing next year? I'll just bring it into this year and that'll lower my tax liability. So that is all part of the investment. That's all part of the helping and the guiding and the watching it. Plus, like you said, when you know I have your back with doing the books, then you can go do what you love to go do, right? You can go talk to clients or bring in more business or whatever it is that you want to do. It's no different than me with my business. I love meeting with new clients, explaining to them what I can do for them to help them. And then that means I have to be working overtime when I'm actually doing the books for my clients. So I am working on building out a team that can help do some of the book work that I don't necessarily, not that I don't want to do it, but I don't always have the time to do it because I'm trying to focus on growing my business. I'm trying to bring in new clients. And so that's where my time is spent. And then my evenings have to be doing the books for people. So I want to
Yeah.
get to the point where I can have somebody working on that in the background, and then I'm doing the reviewing part of it, which is what a majority of my career is. Majority of my career is management and oversight and review of the data.
Yeah. Because once you get to a certain point, there's certainly things that can be done at a very entry level for
Mhm,
somebody in your field. Just
mhm,
like any CPA firm, they're going to have brand new CPAs that are going to do the menial tasks that you shouldn't be doing. Somebody with 30 years of experience, it shouldn't be that person doing
that's right.
the entry level kind of work. So that
That's
all
right.
makes sense, but you're
Yep.
ultimately the one responsible for making sure that everything is done correctly, that gets done before it gets to you. Right.
That's correct.
I mean, so I think so many brand new business owners, entrepreneurs think they can do it themselves. Like they do everything. Nobody can do it as good as me.
Mhm,
Right. And that's true for certain things within my business. Nobody can talk to a client as well as I can in
mhm,
my business. Therefore, that's where I should be spending my time. But can somebody else do books better than me?
right.
Absolutely. Does somebody actually enjoy it better than me? Absolutely. You people say you can't buy time. You absolutely can buy
Yeah,
time because if
agreed.
I mean, in all disclosure, you're doing books for two of my businesses,
Mhm,
and that buys me time, time that I can actually spend making money in another one of my businesses. And also time, because I probably wasn't going to take away from that time to do the books. I was probably going to
mhm.
use my evenings or my weekends to do the
Yeah,
books,
right,
which takes time away from my family.
right.
Right. So
Yep.
I'm buying a little time back and I'm getting a much better result out of it. That's the way I look at
Exactly.
it. Yeah.
Yep. Yep, exactly.
So tell me this, this isn't the only thing you do. You've been involved in other entrepreneurial journeys and ventures. So has everything you've been involved in worked out?
Sadly, no. And I can say that with confidence and appreciation for going through it.
Okay.
So we started a few years ago. I am big on my two biggest loves and people that I love to support is the military. Military is big in my family, and seniors. So one thing, let me back up for just a second. One thing that I want to say that I run across all the time, because I love to get this out there. So people think when they hear CPA or accountant and bookkeeper, they think that CPA has more knowledge than the accountant and the bookkeeper.
Yeah, tell me the difference because those
That
those
is that is
three
not true.
terms get
Yeah.
intermixed and all thrown together, especially bookkeeper and accountant. What's the
Yeah.
difference?
Yeah, that is not. Okay, so your bookkeeper is your what you were saying. It's kind of your data entry, your mundane, let's get the numbers where they need to be, categorizing bank recs, credit card reconciliations, getting everything where it needs to be. The accountant piece of it, which is why I push for myself to be known as an accountant and not a bookkeeper, is because the accountant analyzes the data. The accountant looks at it. Where is it? Where is the profit? Where is the loss? Why is that happening? To be able to help the business owner. So again, looking at the difference between the cash flow and the P&L, what those look like and how we can help you make it different, look different or move in a different direction, right? So that is really the difference between the two of those. And then your CPA piece of it is the step up from your accountant level, um, from the standpoint of being able to own a public accounting firm, being able to, a CPA is geared towards protecting the public. I mean, that's really a majority of the testing for that is protecting the public and making sure that when you come under me as a CPA, as a client, you know that I have your back and I'm going to do everything in my power to make sure that there's no negligence in there and that I'm doing everything that is going to be in your best interest. Um,
So
Go ahead.
let me talk about CPAs real quick because there's a love-hate relationship with CPAs depending on who your
Yes,
CPA is. You
yes.
know, I either hate my CPA or I love my CPA.
Hmm.
And the bottom line with CPAs, what I see them as agents of the IRS, and they only have two goals: to keep you out of jail and to get your taxes done on time.
Hmm.
It's almost like the majority of CPAs just work reactionary. They look
Yes,
backwards and say,
correct,
well, this is what you've
correct.
done, and
That's
this is what
correct.
we can do to save taxes. How do you come in? Because, most business owners, they think, oh, I've got a CPA, he or she, they've got it handled. That's
Hmm.
not the case. Not all
No,
CPAs are created equal. And
nope.
I would say, in my experience, most CPAs, again, just work with historical data and
Yep,
they don't help you to
yep.
plan out your next year and say, this is what you should or shouldn't be doing to even when it comes to structuring your entity, going from an
Hmm.
LLC to an S Corp, do the S Corp election to save on taxes. So where do you come in, or a good accountant comes in prior to, or how do you work with a CPA?
Yeah. I, thank the good Lord, I have a fantastic mentor. So the public accounting firm. So again, me being in the public accounting field for 30 plus years, my current employer, I've been with him for 26. He's a fantastic mentor because he is forward looking, not backward looking. We're constantly planning. We're constantly looking at people's books and knowing where people are at. And so that is a huge piece of the puzzle. One of the reasons why I push people towards me and the firm for tax preparation, because we do look at those kinds of things, and he taught me to be that way. He taught me to look at clients and clients' books and listen to them when we're having a conversation. So I try to zero in when we're having conversations, right? So, like if you and I were talking and you said, in my business, I need to, whatever, I need to buy a big piece of equipment because I'm going to be doing this and I need to be whatever. But the focus of our conversation was actually talking about um, tax preparation for the year, meaning the prior year, but you're telling me now that you need to purchase equipment. I'm tucking that away, going, okay, I'm going to make a note about that because we know he has a lot of income for this past year. He's going to have even more this year because he's brought on new clients, new business, new customers, and he's got to buy equipment. So we're going to make sure we get that information from you. Give me the purchase information, give me the loan documents, give me all that so that we have all of that recorded current in the year. Then when we get later in the year and we can say, all right, this is what your numbers look like. What else can we do to minimize your tax liability? The other piece of it is sometimes with what people are doing in their businesses, they need to show a profit with some things that they're doing. So we need to figure out, what do we pull into the year before to make this year profitable so that you can do whatever it is that you need to do. You need to show a profit for a loan, or again for bonding, or whatever it might be. Then we can figure that out. Plus, not only do you have that profit, but now, Dave, you got to come up with the money to pay that tax liability. Where are you getting it from? Right.
Mm-hmm.
So a lot of times you have good profit in the business, there's cash in the business. So you can take that money out of the business to pay those taxes. So there's a lot of dynamics there, but we are always trying to stay on top of looking at what's coming instead of what's already happened.
Yeah, great. So speaking of taxes and preparing for that, whether you pay quarterly, annually, whatever it may be, what is a good, for a new business owner, what's a good rule of thumb for how much I should put away with any revenue that comes in? How much should I put away and store for a tax bill in the future?
Typically, we say so really that goes off of your individual tax return. So whatever your tax bracket is, if you're in 20% tax bracket or 25% tax bracket or 30 or 35% tax bracket, if you're in the highest bracket, you want to make sure that you at least put away say, 30, 35% of what you're making, set that aside. If you know you're going to have that kind of profit. If you are in the lower tax brackets, use that as your guide, plus whatever your tax liability was for the year before. That's what the estimates are based off of for the next year. So if your tax liability the year before was, 15 grand, that's going to be broken up over the next year to say, okay, you've got 4 quarterly estimated payments to meet that tax liability from the year before, depending, and then being able to use that for the current year, looking at where you're actually going to be. If you're going to actually have a loss, this is another key to the cash flow, right? If we know that going into, say, that piece of equipment you're going to buy this year and it's going to take you into a loss, which is a good thing, because that's giving you depreciation that is not a cash outlay. So that's great. It's lowering your income and you don't have to pay out for your tax liability. Then you don't have to make those estimated tax payments. You can keep that money in your pocket.
Great. So, this is all stuff that most business owners just learn the hard way. Mm-hmm. And they get hit with that news. The CPA tells them the next year, hey, it's April. It's time to make a quarterly tax payment for the next quarter or the previous quarter. Like, wait, what? Oh, so I need to have cash available at all times to do that? Yeah.
Yep.
So that's why,
yep. This is where IDC comes in.
Well, right. So what I love is that you also do what I teach people is, by capitalizing yourself through properly structured or specially structured dividend paying whole life insurance. That's where I've always stuffed my future tax liability payments. Mm-hmm. So it's always been, I'm storing that somewhere. I'm capitalizing myself. And then when that bill comes due, hey, I've got the cash, and it's not just sitting in a bank account, right? Yep. It's stored, It's protected. It's kind of working for me even while I'm leveraging it to use it. But yeah. And I love that you're on board with that. You utilize that concept in your own life. But let's talk about, one more thing. And then I want to go on to some of your other ventures.
Yeah. I need to tell you my failure.
Yeah. I want to hear that. But first I want to ask the question that's probably on everybody's mind. AI. Why don't I just use AI? Like, I've got a paid version of Claude. Maybe I've got Claude Cowork that can just do my books for me. Mm-hmm. What am I missing if I just use AI?
So I believe, and I love personal interaction. So you definitely miss the personal interaction. If you're a person that doesn't care about that, you can use AI. Now, I have learned through, I'm looking into using Claude, but ChatGPT, they're flawed. I can ask ChatGPT something and it comes back with an answer that I know is not correct. Not at all. Now, you not knowing what you're doing, you're not going to know that. So you're going to take it and run with it, right? So you're still going to be in the same boat. You still need to have somebody review it. You still need to have a person review it. So as we hear out there all the time, I believe this. I don't believe that AI is going to take over jobs. I believe that it's people that need to learn how to use AI in the jobs that they're already in, so that they're not replaced by AI. They can just use AI to do their job better, more efficient, more accurately. So I don't really think that AI is the way to go for people, especially when you don't know what you're doing, because you don't know what you don't know, and so you're not going to know if it's right or not.
Yeah. So I totally agree with you and I would tell anybody who thinks AI is the end all be all, you are probably an expert on something. Mm-hmm. Ask AI questions about what you're already an expert on and see if its answers are 100% accurate. Like I can use AI about, whole life insurance in general, infinite banking, and it spits out incorrect stuff all the time. It really does. And I agree that there's a component of human interaction that people yearn for. And just my own belief is that because there's a lot of people on that train, that AI is going to take over everything. Robots going to control everything. You're never going to talk to a human again. There's going to be a bifurcation of society, even in the life insurance space, where maybe life insurance companies, which move as fast as dinosaurs, where they do transition to AI agents, perhaps. and some have already tried this online and they failed. But so there may be some that do that. There's always going to be a segment of the population that doesn't want to deal with a robot. They want to deal with a human being, especially when it comes to stuff as sensitive as their finances.
Yep.
So I think finances are always someone I'm gonna want human interaction. I want somebody who has empathy, who's got who understands emotions,
Yep.
human nature, psychology, all of that.
Yep.
And maybe there's super intelligence that's created at some point, but I know the younger generation. I've talked to a lot of 20 somethings. And anytime they see anything that's AI, they recognize it as AI, they immediately swipe past it. They say,
Mm-hmm.
I'm not giving that any of my attention because I hate
Yeah.
it. It's
Yeah.
fake. It's not authentic.
Crazy.
So,
Yeah.
yeah, I think, I hope you and I are correct that, and I do have enough faith in humanity that there is going to be enough people that eschew AI and say, I'm not doing robots. I want to talk to a human being.
Yeah.
So
Yeah. Yeah.
yeah, I agree with you. Okay, cool. Let's break from that. Let's talk about, every entrepreneur, whether they want to admit it or not, has failed. And whether that failure was 100% their own fault, you just don't know what you don't know.
Mm-hmm.
And if everybody only took that next step, only if they knew they were 100% guaranteed to be successful, sure, people would do it. But that's never the case when it comes to starting a business. So tell us a business venture that you got into that didn't end up lasting and what you learned from that.
So aside from the numerous investments that I got into that, went
You and me
sideways
both. Yeah.
and
Yeah.
took a lot of my retirement and you think you're doing the right thing. You think you're doing your due diligence. You think, right? I mean,
Yeah.
I don't know, so anyway, so I was just still trying to recover and reset from that kind of stuff. But part of that loss was, so again, two of my loves, military and seniors. So what brought me to that conversation about the difference between CPAs and accountants and bookkeepers was my goal was to become a CPA. So when I started with, um, the firm that I'm at, I was supposed to become a CPA and take over the firm. God had a different plan. I needed to take care of my parents. I took care of my father, who's a veteran, and now I'm continuing to take, as a matter of fact, today is his 6-year death anniversary. He passed away from COVID, and now I continue to care for my mom. And so, one of the things that my husband and I got into that really intrigued us was a senior placement service that helped seniors and families find assisted living, memory
You know what?
care,
That's my
independent living.
wife did that for a couple years here in the Twin Cities. She was one of the
Yeah.
reps for a company and
Yep.
she loves seniors too. She would
Yeah.
spend her days just helping. And it's
Yeah.
usually, were you always working with the daughter?
Yep. Yep.
Yeah,
Yep.
because
Most
sons don't
99% of the time. That's right.
help.
That's
It's the
exactly.
daughter, right? So my wife was always working with the daughter to help
Uh-huh.
place the daughter's parents
Yep.
into a facility somewhere in the Twin Cities.
Yep.
That's
Yep.
really cool.
That's it. That's it exactly. So we bought into that. It was a franchise, and unfortunately, what happened was, so where we lived at the time was a specific territory. So we were in the Omaha area, and that was a territory. And then the next city over was Lincoln, which was another territory. The gentleman that came in 1 week before us signed the contract for the Omaha territory where we lived. So we talked about it, we thought about it, and we're like, well, you know what? Lincoln's only an hour away. We know how the assisted living works. We already had mom in assisted living. We really felt like it was going to work, right? And so we jumped in, we put money in, and thank goodness we didn't have, this is one of the things I learned. Thank goodness we didn't take out a loan to put money in. Unfortunately, we used retirement money that we lost, but at least we don't have a loan now. We're not making a loan payment. So anyway, we had that for about 2.5 years and decided this just is not, it's just not, we just could not get our footing. We just could not get the business. So anyway, and then we got to the point where it was just bleeding and we just said we can't do it anymore. So we had to give that up, and that was really tough because we really believed in it and we really loved it, but we just when businesses aren't profitable, you have to figure out a way to walk away, sell it or walk away. And so we had nothing to sell because there was no client base. We didn't really do a whole lot to be able to sell anything. So we ended up passing it off to our neighboring franchisee, who was the one in the Omaha area, and we basically just handed it over to him. So he got it all for free.
Yeah.
So that was pretty painful. Yeah.
Yeah. I mean, that's one of those lessons learned that I think a lot of entrepreneurs maybe learn too late is you got to know when to fold your cards.
Yep.
There's
Yep.
there's just sometimes when, hey, take your lumps and learn from them.
Mhm.
Um, you
Yep.
know, I, yeah, I know what you mean, but you took that and you pivoted into another business.
Mhm.
So, and does this
Yep.
other business have anything to do with, seniors, or even bookkeeping and accounting?
So, yes, it's funny how it all kinds of intertwines, right? So we bought what's considered a luxury moving business a couple years ago, well, about a year and a half ago here in San Antonio, which is now why I'm here in San Antonio. Mom moved with, so she's living with us. I'm caring for her here in the house. I work from home. My husband runs the business, and ironically enough, some of the businesses that he brought on after we took over was assisted living communities. So we help people move into assisted living communities. And because we had been in that space, the franchise that we had is down here as well. So we were able to tap into that same franchise and say, look, we were an owner of this business. This is what we're doing now. If you need, anybody that's moving in needs help moving their furniture in, we can help. And so we've helped with some of that. Um, Bookkeeping accounting business, well, I'm doing the books for our business. So,
Oh
um,
yeah. So you're doing your own books, huh? But I
doing my
guess it's
own
a little
books.
different when
Yep.
you are
Yep.
in the position you're in.
Yes, yes, but we are still, in all transparency, we're still trying to really get our footing with this business. So it started. One of the owners, we kept the owner of the business that we purchased it from. He stayed in the business as a very very minority owner to just kind of help us with it. He started this business in Houston, and then he branched out to the San Antonio area, and same thing for him. It's like a 3 or 4 hour drive, 3.5 hour drive from Houston to San Antonio. So for him to try to manage it and try to work it, it was just getting to be too much. He had it for about 5 years and then decided he wanted to sell it. And through all of the networking, real estate networking, and all of the things that I was doing, we came across this and decided that we wanted to do it. And it's one of those things that you just don't know what you're getting into until you're in it. My husband absolutely loves it, but we're still trying to build it and grow it. So we're doing the same thing. We're funding it right now, just trying to get it really profitable. Our thoughts were going to be build it, grow it, sell it. It just depends. It depends on how well we can do with it because I want to do more businesses. I want to do that entrepreneurial piece of it where I buy, build it, grow it, sell it, do it again, do it again. So
Yeah.
rinse and repeat.
Great. Yeah. It's pretty rewarding. I mean,
Hmm.
it's sure is a lot more challenging than just working a 9 to 5 and being an employee, letting somebody else pay you and give you benefits and all that. No,
Hmm.
you only eat what you kill
That's right.
in the
Yeah.
world of being a business owner, right?
Yep.
So what would you say to kind of wrap this up? When is the right time? You said start, right away with your books. What if I've got a low overhead business? And when when do you think it's the right time to start looking at finding somebody to do your books, your accounting, and all that for you?
Hmm.
Because I think of the life insurance business was pretty low overhead. Now
Hmm.
it's gotten a lot more because doing a lot more marketing and
Yeah.
podcasts and all that kind of stuff.
Yeah. Yeah.
But what's a good sign for a business owner that they should recognize and see as, okay, now's the time. I need to go find somebody else to do this for me.
Well, So what I would say first is I'll kind of market myself here really quick because this is what I do because I am so passionate about taking and helping clients from inception. I just I get on my soapbox about helping them from the get-go because it's so much easier, as I said in the beginning, to help them from the start than let them go 3, 4, 6 months, 8 months, a year, and then try to figure out what we need to do and trying to pay me to do the cleanup, right? And my costs or a bookkeeper's costs should be related to the amount of work that they're doing. So if you are coming to me and you're just starting, my fees are not going to be as high as maybe down the road when you're doing more and more transactions and more customers and more profitable, right? So my fees are going to be commensurate to the level of business that you're doing, okay? So I try to bring clients on regardless, even if I've got somebody that I took on $75 a month just to say, let me help you and let me help you get started. And then as you grow and as you build, we'll up my fees. Okay. Just like me helping the CoSpark community. I'm I'm trying to help people. I'm putting in sweat equity, so I'm trying to help a lot of people and working with them in that fashion. Now, if people don't want to even do that and they want to say, "Look, I just want to do it myself. I want to figure this out," and you don't have the money to really move forward, then I would say when you get to the point that you are costing yourself business because you're spending the time doing books or doing things that you really don't like to do or shouldn't be doing, and you're letting business get away, stop and focus on getting business and farm out what you need to farm out and figure out who you're going to farm it out to. And that's, like I said, that's where I kind of come in because I'm willing to help in that capacity.
That's brilliant. I would agree 100% that you should be questioning everything you're doing on a daily
Mhm.
basis as a business owner
Yep.
and asking yourself, should I be doing this? Is this bringing in more business? If it's not bringing in more business, that needs to be outsourced as soon as you can. As soon as you can, you got the money to do it. In the beginning, you got more time than money, but that time quickly fills up. It's Parkinson's law. Like
Yes.
time
Yes.
will time will
Yes.
increase, or work will increase to fill the time allotted. Like so many business owners spend so much time every day being busy, thinking they're being productive, but they're anything but productive. If at the end of the day you look back and you didn't spend the majority of your day doing something that's going to bring in more business, then you've wasted a day,
Yeah,
unfortunately.
that's right.
Yeah.
Yeah, that's right. Right. It's just like making more money, right? Your costs are going to fill the amount of money that you make. You're just going to
Right.
spend what
Yeah.
you make.
Expenses rise to meet
Yep.
income.
Yep.
So yeah, you got
Correct.
to conquer that.
Yep. Yep.
Well, I can't thank you enough for what you've done for my businesses, the books, cleaning. I don't know if you've seen any more of a disastrous monster of a spreadsheet than I gave you for one of those businesses that was multiple tabs, multiple years of me just putting it into these equations and it spitting out like, I don't know. That was a bear. So
Yep.
I can't believe
Yep.
you. And every time
Yep.
we talked, you were in a good mood and you weren't mad at me. So you didn't make me feel bad.
No,
So
not at all.
makes me think that wasn't the first time you ran into that issue with somebody.
Yeah, absolutely. And I do try to stay in a good mood and I love to help. I mean, that's my foundation. I love to help. I know how stressful it can be and I want to make it better for people. And so if I can do that and allow them to go do what makes them happy, it's a win-win.
Great. And you work with people all over the country. So
Mhm.
how can people find you?
Well, actually, so I'm kind of working with Dave and Rebecca. We're going to be building me a website eventually. I had one for a while and it went away, but the easiest way is to email me at Christina@blueprintbookkeepingcoach.com. And then from there, we can set up a call and see how I can help.
Okay. I'll put that email address in the show notes. Um, Well, thank you so much, Christina. I think this is some valuable stuff for business owners, especially newer business owners who think they got to do it all themselves
Yeah.
and they can't spare the expense. Well, I can tell you from firsthand experience on multiple occasions, that expense translates into more revenue,
Mm-hmm.
which means more income, which means a
Yep.
better lifestyle for me and my family.
Yep.
So thank you for your time and your insight. I look forward to, I'll probably be calling you next week and schedule some time to look over some things.
Yep. Thanks, Dave. I appreciate it. It was great.
Yeah, great. All right. We'll see you.
Okay. Bye.
Hey, everybody. Thanks for listening. If you liked what you heard today, please share it with somebody you know and hit the subscribe button. And if you're looking for more resources on finances, on entrepreneurship, or leadership, check out davidbeffert.com. Thanks for listening.